So you may be pretty excited if you have tip income that you may be able to deduct it under this new Schedule 1A deduction. However, there are restrictions associated with it. So there's a cap on the amount that you're going to be able to deduct. And there's also a limitation with regard to the modified adjusted gross income. If you make more than the limitation, if your modified adjusted gross income is going to be greater than that limitation, then we're going to start to see that it's going to be phased out. So the purpose of this video is to walk you through the process of what happens if you phase out. What happens if your modified adjusted gross income is going to be greater than the ceiling, which is going to be $150,300 if you're married filing jointly. So that's what this video is going to do. So let's go ahead and look at the fact pattern so we can get straight to the math. So for purposes of this walkthrough, what we're going to look at is a taxpayer that has a filing status of single. They're going to go ahead and they're going to have $18,000 of tip income, which we're finding on the W-2 box number 7. And then we have a modified adjusted gross income, our MAGI, which we find on Schedule 1A. Part 1, so we're looking at line number 3, and we're going to say that the MAGI is going to be $154,300. So when I see that $154,300, what I can tell you is that we're already above the phase out of $150,000. So now we are going to have to phase out because we made more. Our modified adjusted gross income is going to be more than what the ceiling is. So let's go ahead and look at the part number 2 of our Schedule 1A, and we're going to actually do this calculation for you. All right, so here's what we're looking at. So we brought in that $18,000 right from our W-2. We saw that on that line number 7. So we have our $18,000 in line 4A. We didn't have any other type of 4137, anything like that. So we have $18,000 a tip. So we're going to bring $18,000 down to line 4, number C. We didn't have anything from a trade or business in this situation, so we're still going to be at 0 on number 5. So line number 6 is still going to be $18,000. For line number 7, you can see that's the cap. So the most that we can take for tip income is going to be $25,000. So if we had $30,000 of tip income, we would have put $25,000 for line number 7. However, since $18,000 is lower than $25,000, we don't have to worry about that. We can still look at deducting, hopefully, the full amount of our tips. So we're going to use $18,000 there. So lower of what line number 6 was, or $25,000. So we've got $18,000. Now I showed you our modified adjusted gross income, which would have been in part 1 of our Schedule 1A. So we'd have gone with AGI, and then we'd have added in basically some foreign types of income. Well, what we're looking at here is $154,300 from our modified adjusted gross income. Now, once we have that, what we have to say is, well, what is the limit? So we have on line number 8, $154,300, but when we look at line number 9, that's telling us, hey, there's a $150,000 limit if you're single, $300,000 if you're married filing jointly. Our taxpayer here is going to be single. So if we make more than $150,000, we're going to have to phase out some of our tip income, right? So what we're looking at is that $18,000 we want as our tip deduction. We're going to have to phase it out because we have modified adjusted gross income of $154,000, but the ceiling is $150,000 before we start a phase out. So now how much do we have to phase out by? Well, here's what we do. For line number 10, we're going to subtract the $150,000 from our $154,300. So we have our modified adjusted gross income was $4,300 more than the limit, right? More than where we start out on the phase out. So we have $4,300. Now, of that $4,300, what we're going to do is we're going to divide by $1,000. We use $1,000 because the phase out works in $1,000 increments. So we have 4,300 divided by 1,000. What we come out to is 4.3. So we're going to have a factor of 4.3. So on line number 11, you can see that we're going to put the number 4 there. Because if we look at line 11, it says divide line number 10, that 4,300, we did that math, by 1,000. If the resulting number isn't a whole number, decrease the result to the next lower number. So a 4.3, a 4.6, a 4 point whatever is going to be decreased down to a 4. So we now have a 4 there. So what's going to happen is we're going to go 4 times 100, because line 12 is telling us to use $100, because we reduced the deduction by $100 for every $1,000. that we're over the modified adjusted gross income. So if we go 4 times 100, that gives us $400. So what we're going to do now is we're going to go ahead and we're going to say, okay, line number 12 is 400. So what is going to be our actual deduction for line number 13? It's going to be 17,600, because what we took was our tip income that had been capped at 25,000, but we're at 18,000, and we can find that on line number 7 minus line 12, that $400 that we just calculated. That's going to give us $17,600. That's the amount that we're going to be able to deduct against our taxable income in the current year. Hey, I want to point out one more thing for you, all right? So when we're looking at that line number 11, and we're rounding down, right? Because we're at a 4.3, and we said line down, even if it was a 4.6, we decrease it. Hey, that's actually taxpayer friendly. If it had been 5, then what we'd have done is we'd have had to go ahead and multiply 100 times 5, and then we'd have had $500. It would have made us phase out more. So when you see the decrease, that is designed for your benefit. All right, if this video has been helping you, go ahead and subscribe to my channel. I am going to do another video. Now we're going to go ahead and we're going to look at how we phase out in terms of overtime compensation.